Hey everybody, this is Sami Abusaad with the Strategic Swing Trader, just coming at you before lunch, before I take a lunch break, to discuss a few things. One being the first is can you swing trade penny stocks? Anything under $5 is considered a penny stock, even though obviously it would literally be a penny stock if it was under a dollar. But anything under five usually has no institutional sponsorship, or institutional money is not involved in it, and so people think that trading penny stocks is for that reason and many other reasons is risky because they tend to move a lot. But can you trade penny stocks? Well, on the weekend, when I do my weekend review, I mean, when I do my video showing you what plays I'm looking at for the next week, BW was highlighted as one of the favorite watches. And as you can see, it broke down already, and it triggered. In fact, yesterday was down 15%, I believe. So there it is. It worked as a short. It's working. I don't want to jinx it just yet. But the point is that I want to make here is I treat penny stocks exactly like I treat any other stock, um, with one exception, which is they need to be highly liquid. I don't want to get stuck in a penny stock. I want to be able to get out whenever I want to get out. But I treat them, I look at price action regardless of the price of stock. It could be a $1 stock, could be a $100 stock. I don't really care at all. What matters is, does the price action look good? Is it something that you would do regardless of the price of the stock? And if the answer is yes, then absolutely, why not? This had a base at the all-time lows plus a breakout failure. This is called a money bar. When the stock actually pops, it sucks in the longs and then it breaks down, triggering the short. Yesterday, I didn't have such a good day, but that was, look at it, just BW was my best play. Made $1,000. I'm in it, still 5,000 shares. And then I looked at the other P&Ls, just the random P&Ls really that I've taken pictures of. And I looked and I said, how many of them were they penny stocks, $5 or less? Just look, right? Here you go. Look at it. At least half of what I play is penny stocks. And not for any reason, a particular reason. I just do it if I like the price pattern. If I like the price pattern, then no problem. I'll take it, regardless of the price of the stock. So don't be afraid to trade penny stocks as long as you know what you're looking for, and as long as the penny stock is liquid enough so that you can get in and out whenever you want to. But just take a look. So look at all these nice P&Ls, most of which, look at this, $11,000, more than half. I would say that's more than half, or about half of the money came from the penny stocks. So that's the first topic I wanted to cover with you. Just wanted to do away with this misconception that people have that you can't swing trade penny stocks. I've been swing trading penny stocks for 10 years. Sometimes I swing trade a 50-cent stock. In fact, one of these P&Ls, I had two swing trades that were 50 cent or something like this. I'm not sure which one. I'm not going to go over them again, but one of them I had short, two penny stocks that were about 50 cents. The second topic is that I wanted to cover was wide range bars, right? We saw the Qs print a nice big wide range bar, but what do you do with wide range bars? Do you believe they are the footprints of money? Do you believe that it's institutional money that went in long and that we have to go up again and produce follow through? And the answer is it is absolutely not the case at all. With the thing about wide range bars, they're important, but only if they produce follow through. only if they produce follow through. If they don't, that goes to show you how weak the stock is. You can look at any chart you want. You can even look at the market. Look at that wide range bar right here that day. Produced no follow through, and then from there we dropped really hard. But again, wide range bars are only important if they produce follow through. Know that one bar events, wide range bars that produce no follow through, show you how weak the stock really is. If I were to show you this chart and I were to ask you what stands out about it, what stands out about a chart like this? To me, the first thing that would jump out at me are the wide range bars. Look at this huge wide range bar from it was up 40% that day, right? From 6 to 8 or below even 6 to 8. Look at the volume. Look at this wide range bar, right? Every single wide range bar that was produced by this stock, the green bar, got ignored. Didn't produce any follow through. What do I mean by follow through? I need the second bar that takes out the wide range bars high. Again, I need tomorrow's bar to take out the wide range bars high and close above it. That constitutes follow through. And the message is, despite how seemingly powerful those wide range bars looked, they were to be ignored. And as you can see, the stock just continued lower and lower. So the message is you have to wait for follow through. So in the case of the market, the current market that we have, this is a chart of the Qs. When you get the first wide range bar, if you're in it, okay, fine. But if you're not, you don't jump in. What you do is you wait for a narrow range bar and then the 1, 2, 3, or if the market keeps going, then you missed it, right? If it just keeps going, but usually most of the time after a wide range bar, you get a narrow range bar. Again, after a wide range bar, you get a narrow range bar. After a wide range bar, you get a narrow range bar. You get the message, right? After a wide range bar, you get a narrow range bar. Wide range bar, narrow range bar. 80% of the time, not always. Here's a wide range bar. We didn't get a narrow range bar. We got follow through. But most of the time, 80% of the time, you get a narrow range bar. Now, if you get a narrow range bar and then we proceed to go higher, then you have a new entry. So yesterday, I was in the black room. A lot of people were asking, should we swing trade the Qs? And the answer was no. If you're not in it already from the bottom, now it's not the time to do it. Wait for tomorrow. Let's see if we can get a base on the hourly chart or basically a narrow range bar on the daily. And then if we break out above it, then sure, that would be an entry. Now, if we keep going, we don't slow down like here. We didn't slow down. We just kept going. If you keep going, then okay, well, you missed the play. And if we reverse it completely, then you avoided a stop out. Does that make sense? But wide range bars are only significant if they produce follow through. One should not jump in on the day the stock prints a wide range bar. One should wait for a setup to form afterwards. And that's why I'm not in the market, even though we do have a buy setup pattern. I'm waiting for it to give me a 1, 2, 3. Today's bar was not a narrow range bar, so that's pretty big and a little bearish. But if we take out, this is the line in the sand, 183.42. If we take that out, then I think the market goes higher. If we reverse this bar's low, then we're in trouble a little bit. We're sideways. Basically, we're not going higher. Um, the other thing I want to talk about real quick is when you have 100% retracement, like we did here, don't buy the first buy setup. The rule of thumb is if there's anything wrong with the setup, you don't take the first entry. You pass on the first entry and you only enter on confirmation. If there's nothing wrong with it, it's just a perfect looking setup, then you don't pass on the first entry, you take it. But if there's something wrong with it, you pass on it and you wait for confirmation. Confirmation can be in the form of just a secondary entry. What's a secondary entry? So you let the first trigger go, which we got yesterday by taking out the prior bar's high. That was a trigger. You let that go, and then you wait for the inside bar. And then if we take it out, that's a secondary sign of strength. SSS, secondary sign of strength, or confirmation in this case. So what was wrong with this setup? Well, again, we had 100% retracement, just about. Well, pretty much 100% retracement. Bullish stocks or markets don't pull back 100%. They don't retrace 100%. They pull back and stay in the area of the 40 to 60%, something like this. Bullish stocks or markets, they don't break the moving average. They hold the moving average. Bullish stocks stay at minor support. They don't break through minor support. So this was definitely a deep pullback that came from a rounding top. The more bars at the top, the more bearish it is, right? With from a rounding top and retraced a lot, went through support, a good amount through support, didn't break support totally, but deep into support. So one should pass on the first entry and look only for a secondary entry. And if the market continues lower, then you avoided the stop out. Perfect. That's what trading is all about. It's not about winning all the time. It's about avoiding the losses also. It's about doing the right thing at the right time all the time. That's what trading is about for me. It's about doing the right thing, the right time, at any given time. Sometimes, as I said, you pass on the entry and then the market just keeps going. So be it. You miss out. That's fine. That's part of the game. But I ought to do what I know I need to do and what I know I ought to do, and then let the chips fall where they may. Apple has that conference thing today. Pretty bullish. Daily buy setup plus a retest. So I think, watch Apple if you want to know where the market is going. But I also have a setup. I mean, I know regardless of what Apple does, I'm going to still do the same thing on the Qs, which is pass on it today and only tomorrow, if we take out the highs here, will I be interested in playing long. I usually don't play the market itself. I play individual stocks. So I'll just be focusing on, I'll have a list of longs ready. And if you're part of the strategic swing trader, I'll post the plays for you. Um, so you can tag along if you're interested. So I'll have a list of stocks ready to go long if the market were to take out the highs. And if the market continues lower, well, I got a bunch of shorts already open. I mean, I have like half a dozen probably shorts, so I'll benefit from that too. All right, guys, I hope you enjoyed today's video. Have a nice rest of the day and a nice rest of the week, and I will talk to you next time. I'm doing actually a webinar today. Feel free to stop by. But if I don't see you there, then I'll talk to you soon. Take care, everybody. Enjoy the rest of your day.